All right, what up, guys? I have no idea if you guys can hear me right now because I'm not on my headphones, as you can see. So, this is going to be one of those streams where I don't know what the audio is sounding like. All right. So, my apologies for that. I have no idea what the audio is sounding like. But, anyways, I'm going to check using my phone right now just to see what the audio is sounding like. Then I'm going to start the stream, do what I have to do, and hopefully it's going to be a good one. You guys are going to learn a thing or two. um Obviously you guys are going to learn a thing or two, because anytime I'm here, I'm always dropping gems. All right, I'm always dropping gems like a Gemini. All right, so now we're talking, man. All right, so first things first, I'm gonna go to my phone and try to check what the audio is sounding like, because I want to know what's sounding like. um Mic check, mic check. Mic check, mic check. All right, I guess you guys could hear that, right? Alright. I guess you guys could hear that, right? All right, cool, 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 cool. Now, before I do anything, for anybody that's watching, I want you to take the link and I want you to share the link out right now. Okay. I want you to take the stream link and I want you to go on WhatsApp. I want you to go on Instagram. I want you to go on Facebook, wherever it is that you are. I want you to share the link right now. I want you to go share the link right now. Okay, go share the link right now. Go share the link right now. Go share the link right now. Share the link somewhere right now, man. Share the link somewhere right now. Before I even start to do nothing, before I start to do nothing, share the link out, man. Share the link out. Share the link out. Share the link out. Share out the link. 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 Mm, I'm doing mine. So if you don't mind, you want to do yours as well. So if you don't mind, you want to do yours as well. Please share the link. Please share the link. Share the link. Share the link. Okay, share the link. Let people know what we're doing. All right. Let people know what we're doing. Let people know we're doing something meaningful. Let people know we're doing something tangible. All right. Let people know we're doing something tangible. Okay. All right. So if you're not too busy right now, I want you to join my live stream on YouTube. I'm gonna attach a link to this video. So all you have to do is click on the link. Again, if you're not too busy, if you have an hour to spare, if you have maybe an hour and 30 minutes to spare, then you want to jump on this live stream with me right now. So, like I said, on YouTube, click on the link, and I'll meet you guys in class, man. All right. So, all we need is some kind of traction, guys. We need people to actually be on the live stream so we can actually communicate with people. We can interact with people. All right. So that's why I'm calling on people right now. So if you know any of your peoples who are interested in trading and things of that nature, um, please try and reach out to them right now and notify them to join the live stream. Okay. I'm about to jump into the charts right now. And of course, once I start doing my technical analysis, once I'm in that mood, uh, it's dog fights. It's a dog fight, man. So notify your peoples right now. Let them know something crazy is going on here because when I call my trades, when I give my directional bias and things of that nature, I mean, you guys know how it is. You know how it is. Okay, long term, I give a trade, and for 2 weeks, 3 weeks, the market is going in that same direction for 2, 3 weeks. Why? Because we do top down analysis, because we do multi time frame analysis, because we look at the market from a higher time frame down to the lower time frame. All right. We look at the market from the higher time frame down to the lower time frames. So anytime I'm here calling trades, anytime I'm here giving my directional bias, you guys know how it is. All right. So if you're viewing this right now, I want you to leave a comment. Let me know you're active. Okay. Let me know you're active. Leave a comment. Let me know you're active. I don't really care if it's one viewer, two viewers. As long as I know there's somebody out there that's gaining value from this, then I'm very, very happy to share things that I know to educate somebody else. So I want to see a comment right now. If you're active, all right. Oh, whoa. Oh, oh, okay. My peoples is active. My snipers are active. My snipers are active. I like that. I like that. I like that. All right, enough said. Enough said. Um, let's go into the charts right now. Of course, you guys know we're looking at Bitcoin, we're looking at Euro USD, GBP USD. Um, we're looking at gold. So I'm gonna dive into the charts real quick right now. So we can start digging in. We can start digging in, right? Digging into price action, digging into um, you know, everything that we talk about. So Hmm. Okay. All right. Are we ready? Are we ready to go? Are we ready to go? Are we ready to go? All right. So I'm going to be starting with Bitcoin. All right. I'm going to be starting with Bitcoin just because, when we rolled the dice, it ended on BTC, right? So what you can see here is the daily time frame on one side and the daily time frame on the other side, apparently. But wait, hold on. Um, I'm gonna have to monitor this on my phone. So what you can see is basically I want to put the higher time frame on one side and put a relatively lower time frame on the other side. All right. I want to put the higher time frame on this side, which is the daily time frame, and I want to put, the 4 hour time frame on this side. Now my 4 hour time frame is looking very, very busy. Okay. But that's because I've been documenting the market for a very long time. I've been following the market for a very long time. Now, I'm not saying I've caught all of these trades that you can see marked out on the chart. This is just a reflection of the work that I've done over the last couple of months on this one pair. Okay. If I go to other pairs, you can see how I have multiple, markups on other pairs as well. This is Ethereum. This is US30. Okay. This is EURUSD. All right. This is GBPUSD. And this is gold. Okay, unfortunately, the trade for gold left without warning yesterday, and we count that as a missed opportunity, not a loss per se, but like a missed opportunity. But I want to start with Bitcoin because the price action on Bitcoin is quite interesting. Okay, um, I'm gonna expand the daily time frame. All right, I want to expand the daily time frame so we can see like an overview of what's going on here. Okay. Now, without a doubt, looking at the daily time frame, I believe we can all agree that the daily time frame is bearish. Okay. Now, what does it mean for the market to be bearish? It simply means that the market is making consistent lower lows, is returning back to make lower highs, and it's making lower lows. That's the meaning of the market being bearish. Okay. If you look on the daily time frame, it is very, very obvious that the market is bearish, right? Because we can see how the market is creating highs, lows, highs. We have breaks of structure to the downside with massive impulsive movements, right? And then we have pullbacks that are even struggling to be healthy, right? We have massive break of structure to the downside, again, with that same type of impulse. And we have a pullback that's not even so healthy, right? And we're seeing another massive spike to the downside. So this particular leg, which is the last leg from this high, is expected to break this low at the end of the day if the commandments of market structure is true. Okay, there are certain commandments of market structure whereby in a downtrend the market has to break to the downside and create a lower low. So right now where we are in the market is we are along this leg, but we haven't taken out the lows yet. But the thing is, we believe that the commandment of market structure is true, so we're expecting this to happen. We have a high expectation for this low to be taken out. based on the fact that we have backtested the market, we believe in market structure and things of that nature. Okay, so with all of that being said, let's now look at the market and understand where we are currently in the market. Let's understand where we are currently in the market. Remember, like I said, we have the expectation of this leg breaking to the downside and giving us a new low, taking out this at the end of the day. So in terms of my external market structure take profit, because this is all coming from the daily time frame, right? This is all coming from the daily time frame. The daily time frame being a higher time frame, I'm classifying this to be external structure. Okay? So the external take profits, right? The external take profits. Now, one thing you would notice is the fact that I'm trying to get the direction of the market. Where is the market going? And that's what's going to be informing any trade decision that I'm taking. Okay? Where is the market going? That's informing my trade decision. So keep that in mind. As long as we know that the market should be taking out this low at the end of the day, that's why we are now selling the market into those areas. Okay, so this is basically how you determine your directional bias from the higher time frame. All right. Now, I'm going to name this my take profits. Okay, I'm going to name that my take profits. So we're expecting the market to go lower than that to create a lower low. Now, where the market is exactly right now is the fact that for the market to, from this high, break this low, there's definitely going to be some type of internal market structure within that leg. So we can see low, high, low, high. You see, the market is breaking to the downside, pulling back, breaking to the downside, pulling back. So there's an internal downtrend along this area here. So I can now focus on that internal structure, this internal structure right now. Now, zooming in to the most recent impulse, which is from this high all the way down to this low. Okay, from this high all the way down to this low. That's the most recent impulse on the structure pushing to the downside. That's the most recent impulse, right? From this high all the way down to that low. Now, when the market pushed to that area there, it broke certain levels of demand. Remember, we were previously in an uptrend. Okay, we were previously in an uptrend, right? Or you can say this, that, that. And of course, we had a change of character to the downside, right? That led to all of these downward movements, okay? All of these downward movements. That's exactly how the market moved. Now, we had demand levels around this area here where we could have expected buys, okay? We could have expected buys from this particular demand level. This was a valid demand level, a very, very valid demand level. Why? Because at the time, there was sufficient liquidity around this area here to be taken into the demand level, reaction from the demand level, and the market could have pushed it upside for a buy. Remember, at the time, we were also looking as though the market was in a bullish program, right? We had something that looked like high, low. We're having highs, we're having lows. We're having highs, we're having lows. Massive push to the upside. So this is definitely something that was expected in terms of market structure, right? So for the fact that this demand level has now failed, this particular demand level has now turned into a supply level. Okay, so this is the idea of break and retest, right? Where the market is breaking a support level and it's flipping the support level into a resistance level. So that's exactly what's going on here. Okay, so this demand level was broken by this impulse. So you can see how I'm tying it back to where we are in the market right now. Okay, this is the impulse on the downtrend. This is the last impulse on the downtrend that pushed out and took out the demand level. And as soon as it takes out that demand level, it flipped that demand level into a supply level, meaning that it flipped the support level into a resistance level. And we can now expect the market to pull back into that resistance level and have a sell opportunity from there, which would eventually come to take out this low. That would be the profit target for that particular move right there that's playing out right now. Okay. So that's the storyline of this particular trade from the higher time frame. That's the storyline of that trade from the higher time frame. Let me know if anybody has a question before I continue, before I start to go lower and refine this level basically. So this level becomes a breaker level. Okay. And of course, I have templates for all of this. So I don't really need to stress myself to always customize my tools. Okay. I have pre-saved templates for all of the tools that I'm using. Right. So we understand the narrative coming from the daily time frame. Okay, we understand 100% the narrative coming from the daily time frame, and we know where the market is headed. We know what we should be looking for in the market. We know where we should be looking at in the market. It's now a matter of just refining the levels that we have discovered from the higher time frame into lower time frame levels where we can now execute our trades. It is as simple as that. Now, what do I mean? Since we know that we can be looking for a sell from this level, remember, the market has broken this. The market has broken this, pushed to the downside, back up. We are now in a sell program. Okay. We are now in a sell program. Hold on, guys. So we're basically in a sell program. Okay. We're in a sell program. Right. So we have the expectation that the market can pull back into this flipped area of demand that's turned into supply. Right. So we can have a sell from that area and push to the downside. Now, mind you, this area is coming from the daily time frame. So it's a very, very large area. So we need to refine this area down to lower time frame. Now, how do we refine down to lower time frame? We utilize again market structure, as simple as that. So when we jump to the lower time frame, okay, when we jump to the lower time frame, I'm going to go on the 4-hour time frame. From the daily now, I'm jumping down to the 4-hour, right? Internal structure along that breaker area, okay? Now, this is where I'm going to split my screen. I'll show you the daily on one side, okay? I'll show you the daily on one side, and I'll show you the 4-hour on the other side. Now, this is the daily, right? This is that same area on the daily time frame, which is the breaker, right? This is the breaker on the daily time frame. However, on the 4-hour time frame now, looking at internal market structure, the reason why I'm calling it internal market structure is because the 4-hour is lower than the daily, which means that there are multiple 4-hour time frames within a daily time frame. So it's internal of the daily. So the internal structure of this leg, right? This leg, the internal structure of this leg on the daily time frame, which we're breaking down. Remember, we said the market can pull back into this area and sell. But on the daily time frame, we can't use the entire area for our trade. It's going to be a very, very large area, and the risk to reward is not going to favor us very much if the market is taking out this. This is only a 1 to 1.8 risk to reward trade. Is that a good trade? Yes, but is that the best trade you can take? Probably not. All right. So the reason why we are narrowing down the area is because we want to reduce the trade to the point where we can have a smaller area of risk and a larger area of potential reward. We are trying to increase our risk to reward ratio to the point where even before the market gets to the final take profit on the daily time frame, we can already make a 1:10 risk to reward trade based on where we enter the trade from. And that's going to be in terms of the time frame. All right. So again, I'm breaking this down so you can understand breaker levels. This is a master class on breaker levels right now. This is a master class on breaker levels. I've already explained why this area is a breaker level, right? So we're trying to refine the breaker level now. Again, this is the daily breaker. And on the 4-hour now, internal, the law of market structure states that whenever we have a market structure break to the downside, we have an order block from this area. That's the law of market structure, right? So according to the law of market structure, whenever there's a break of structure, there's an order block, or in this case, a supply level. This is going to be a supply level. Break of structure, supply level. Because there's now the possibility that the market can pull back to the order block and sell. All right. Now, based on this concept, which is a fact, okay, why am I saying that on the internal structure, on the 4-hour now, why am I saying that I'm having a break of structure internally and is aligned with the same area that I've gotten from the daily time frame? That's not a coincidence. That's not a coincidence, guys. So I'm seeing low. Look at this. This is a low. This is a high. That's a break of structure. That's a break of structure, guys. A break of structure, clear to the downside. That's a break of structure to the downside. And guess what? Around this area here, there is now liquidity. So you can see how I don't look for liquidity. I always say this and people find it very, very weird. I say it all the time. I don't look for liquidity. I follow market structure and liquidity reveals itself to me. Liquidity reveals itself to me. I don't look for it. I don't search for liquidity. Now, why is there also a fair value gap there for the people who use fair value gaps? I don't use fair value gaps. But why is there a fair value gaps there? Why is everything aligning? Okay, why is everything aligning? Especially when we now take it a step further. Okay, let's take it a step further and go to the 1-hour time frame. Let's take it a step further and go to the 1-hour time frame. You can now see how multiple time frames all agree. This is the 1-hour time frame around that same area there. Just looking at the market structure on the 1-hour time frame, we also have a break of structure around this area here. Okay, we also have a break of structure on the 1-hour time frame around that area there, making this area here an order block. So we have basically narrowed down the daily breaker from where you would have taken a trade from. This is the starting of the daily breaker. Your entry would have been there, and maybe your stop loss is a little bit above this, right? Maybe this is what your trade will be looking like from a daily perspective. We're basically taking this trade and we have narrowed it down not only to the 4-hour time frame, which is this, and your entry will now be this, and stop loss will be right there. Not only did we narrow it down to the 4-hour, reducing the area of stop loss a lot, right? We took it all the way down to the 1-hour time frame, and we now have something that looks like this. Now with the exact same take profits, that trade is a 1:5 risk to reward trade. That's a 1:5 risk to reward trade. All right. Now, this is what the trade is looking like right now. This is what the trade is looking like. This is how it's playing out right now. And again, what I really want to show you guys in this video is that there's a trade within a trade. Okay. There's a trade within a trade. So this on the 1-hour time frame, your take profits will be around this area here. That's going to be a 1:5.5 risk to reward trade. Okay. 1:5.5 risk to reward trade. With the take profit being right there. Now, this is where things can get very, very interesting. The fact that there are trades within a trade. Again, I believe you guys can see the higher time frame in comparison with the lower time frame. This is the higher time frame where we have established that we are expecting this leg to pull back and create a new low. That's the expectation from the higher time frame. Now, look at what's going on the lower time frame. Are we not fulfilling that prophecy? Are we not fulfilling that prophecy right now? We are. We're fulfilling that prophecy right now. Like I always tell you guys, I don't analyze, I prophesy. Okay, and anytime I prophesy, the prophecies always come to pass. Okay, the prophecies always come to pass. This is a prophecy that I made a couple of weeks back. Okay, this is one of those prophecies that I made a couple of weeks back, and today we can see how the prophecy is fulfilling itself. Okay, it's a self-fulfilling prophecy, guys. It's a self-fulfilling prophecy. And the reason is because nobody controls the market. Okay? Nobody controls the market. Nobody, no one person controls the market. All right? So in order to make this a little bit cleaner, on the daily time frame, we expected the market to pull back from this low into the breaker level and find its way to create a new low, okay? Giving us a lower low, a new lower low, right? Now you can see how the market has indeed, so I'm going to open this up right now. You can see how the market has indeed from this low, okay? Let me just place this very well. So from this low, come on now. From this low, the market indeed pulled back into our refined area on the 1 hour time frame, okay? And the market is now making its way back down to try to create a new low. Now, this is where it gets interesting. Now, in terms of risk entry, whereby you expect the market to get to a level and sell from that level, this will be your first trade. All right, this will be your first trade. Okay, but in a situation whereby you're waiting for confirmation entry, that's where you can now find the trade within a trade. Now, I'm going to use this to explain the simple reversal pattern. Okay, the simple reversal pattern. Simple reversal pattern. Now, this one is very easy because this is coming from a place whereby the trend cannot continue forever. The trend cannot keep going up for a prolonged period of time, and it just goes up and up and up and up and up and up and up. No, that's not how the market works. Okay, trend works in a way whereby we create a higher high, we create a higher low, we create a higher high, we create a higher low. That's to tell you that there are reversals within a trend. Okay, there are reversals within a trend. If this is an uptrend, which is rightfully so, this is telling you that there is a reversal around this area here. 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 And of course, when the market is done creating that higher high, there's going to be a reversal that now brings the market into a pullback phase. And of course, when the pullback is reversing back to the upside, it goes ahead and creates a new higher high. So I'm trying to explain the fact that there are reversals within a trend. Understand this so you can be able to read the market correctly. There are reversals within the trend. The market is always changing its trend in as much as it's moving to one direction. Okay? It's always changing its trend. Now, around this area here, there was a clean reversal. Okay? There was a very, very clean reversal around this area here. And, now that I've mentioned it, if you look at it now, you'll be able to see it. But why is it that you can't identify this in real time? Maybe it's because you haven't backtested this enough. Maybe it's because you haven't studied this enough, and I'm just keeping it a 100 with you, right? But there was a very, very clean reversal there, and I'll show you guys right now. Looking at the structure on the 1 hour time frame. Okay, let's even go to the 30 minutes time frame. I believe we'll be able to see it a lot clearer on the 30 minutes time frame. Look at the 30 minutes time frame, guys. Look at the 30 minutes time frame. Look at the structure on the 30 minutes time frame. Look at how the market pushed to the upside, right? At what point was there a change of character, and at what point did the market start creating multiple lower lows? That's what you want to ask yourself. So I'm going to break down what a reversal means, okay? I'm going to break down what a reversal means. So a reversal is simply the market is pushing to the upside, right? The market is pushing to the upside, okay? It has the habit or the character of breaking market structure to the upside. But all of a sudden, it breaks market structure to the downside. And not that it just did that. Not only did the market do that, it attempted to go higher, but failed and continued to break structure to the downside. So we now have multiple breaks of structure to the downside. That's a confirmation that indeed the trend may have changed, because multiple break of structure to any direction in the market shows that the market is trending in that direction. Obviously, the market was trending to the upside, but not only did it break to the downside, it confirmed that it wanted to go down. It showed intention that it wanted to go down. So at this point, there's no reason to be looking for buyers anymore. We can now just start to look for sales around these areas here to take it to the downside. Now, I want you to tattoo this in your mind, okay? And look at the market with me on the 30 minutes time frame and see if that's not exactly what happened around this area here. So let's go from this low, right? We have this, high, we have this low, we have this high, we have this low, we have this high. Okay, at this point, we have already come into the zone that we have said we are looking to sell from. So a reaction from that zone causes the market to break structure to the downside. We have that attempt to go higher. Okay, around here, we are here. We have that last attempt to go higher. The market fails, and then we have big push to the downside around this area here. Boom. As soon as you have that big push to the downside, we have now completed 2 breaks of structure to the downside. Like, this is the first one around this area here. That's the first break of structure to the downside. And the second one around this area here. So we have 2 breaks of structure to the downside. Okay, so where we're looking at right now is now the immediate trend that has started. Okay, the immediate trend that has started. You can even just slap in your Fibonacci. A lot of people don't know when to deploy the Fibonacci. Okay, a lot of people don't know when to deploy the Fibonacci. Look at the Fibonacci right there, right on the optimal trade entry, which is aligned with an internal structure level. Okay, so on this push, right, on this push, have it in mind that this push also has internal structure where you can get good entries from. Okay, on this push, we have low, we have high, we have break of structure to the downside. The market left some type of liquidity around that area. You can see how the market ranged for a while. It ranged around this area here. This is kind of like a triple top happening there. This is 1, this is 2, this is 3. Only for the market to come here, came back, manipulated all of the stop losses around that area there, and boom, that was the trade to the downside. Now at this point, you can see the market hasn't really gone far, but this is already a 1:5 risk to reward trade. I don't want to show you where this trade is right now because you might feel bad that you missed it. Okay, currently in total, this trade has run, at this point, this is a 1:8 risk to reward trade. And remember, the final take profit for this is around this area here, and that will be a 1:14 risk to reward trade at the end of the day, if the market, okay, on the condition that the market fulfills the prophecy. Okay, that will be the trade. That will be the trade. That will be the setup. So from a trade that was a 1:1.8 on the daily time frame, I mean, look at the difference in terms of what your entry to your stop loss would have been. Just look at the difference. Using the entire breaker level on the daily time frame, to the take profit, you have a 1 to 2 risk to reward trade, right? Now, looking at that same trade, having waited for the market to get into your daily zone, seeing your necessary confirmations, and executing at the right time, your trade is now a 1:14 risk to reward trade. Somebody say NSPPD, man. And I could show you multiple entries, right? Because according to the law of market structure, which does not fail, okay, it doesn't fail. That's why I call it a prophecy, because it is going to happen. Another area, just looking at these markets, again, slapping your Fibonacci right here. Slapping your Fibonacci right here from this high, okay, all the way down to this low. What do you have? We are right in the zone again. Now, the beautiful thing about this is the fact that this zone is aligning with market structure even yet again, guys. Even yet again. You know why I know I'm one of the best educators is because of the consistency of the strategy. I've not even left this time frame, and we have seen the strategy repeat itself multiple times. Okay, multiple times. That's another area of entry there, according to the law of market structure. Entry. Okay, now look at what we're having. Can you guys see what's going on there? Market structure is aligning with Fibonacci, okay, and is giving a very, very beautiful trade once again. That's a trade within the first original trade idea. Remember, the original trade idea is coming from the daily time frame. If you would have used the entire daily breaker, that's one trade. But while you know the direction where the market is going, you can now use the concept of market structure, which is, infallible, and get multiple trades while the market is pushing to the downside. This is another 1:7 risk to reward opportunity here. And if you notice, I'm not using any fancy words. I'm not using, you can argue that I'm trading smart money concept, but I'm trading market structure here, guys. I'm trading structure. I'm not trading smart money concept. You cannot hear me saying fair value gap liquidity. Oh, I'm only saying it because of you guys. I'm only saying fair value gap liquidity because some of you relate to fair value gap and liquidity as your understanding of smart money concept. That's the only reason why sometimes I bring it up. Of course, I trade with the awareness of fair value gap and liquidity, but what I'm trading here is market structure. This is market structure. The nature of the market already exposes where we should be entering our trades. Once you have a break, you can either enter from breaker or you can enter from order block. Now, the order blocks could be internal order blocks, right? This internal order block is aligned with breaker. This internal order block is aligned with the main order block coming from the higher time frame. Guys, you can see how I'm reciting these things like, these are nursery school rhymes. It's because I have a lot of experience with, doing this, not just trading, but educating as well, right? So as we speak right now, I'm going to show you guys that I'm actually on a trade. Okay, I'm actually on a trade on EURUSD. All right, so I'm going to switch this up. All right, so you can see I'm actually on a trade. I don't know if you guys can see this. I'm actually on a trade on EURUSD. Okay, that's EURUSD. EURUSD. I'm about to go to EURUSD in a second right now, but you can see it. Look at it right there. I'm actually on a trade. So I use these concepts as well. Okay, I use these concepts as well. This is the exact same thing I'm using. All right, it's the exact same things that I'm using. I'm not teaching you something different and using something different behind your backs. I use the exact same concepts that I teach, and I'm very confident in them. Now, mind you, if you want to know everything that I know, okay, if you want to know everything that I know, exactly how I know it, how I'm able to teach this from top to bottom without any form of textbook or any kind of thing like that, all you have to do is go on my YouTube channel. Okay, go on my YouTube channel, and I want you to just go get the course, man. Just go get the course. Just go get the course. Okay, so when you go on my YouTube channel, you want to go to this okay, so this is mine, but obviously you want to be able to find me on YouTube. This is my YouTube channel, guys. And you can see I've been doing this for a while. This is a year ago. Okay, this is 7 days ago, 6 days ago. This is also a year ago, right? Go back to these videos and watch these videos. You will see that I'm using the exact same things that I'm using right now. The exact same knowledge, the exact same process, the exact same type of breakdown. That's the consistency in the strategy, guys. That's the consistency in the strategy. Okay. And of course, you want to be able to get the course as well. Okay, you want to get the course. So the course link is going to be somewhere. Let me just go into one of these videos. I believe the course link is somewhere in one of the videos. Let me say trade breakdown. I believe the course link is somewhere in the recent videos. Okay, in the recent videos. The course link should be in the description of one of these videos. So again, if you want to learn this from scratch, you guys are basically welcome to another video. In this video, if you want to learn this from scratch, okay, from scratch, absolute scratch. I'm talking of as a total beginner, you have no idea where to start. Okay, you have no idea where to start. This is exactly where you need to be. This is exactly where you need to be. All right. This is exactly where you need to be. The course goes for just 185,000 naira. That's about $130 or $120, something thereabouts. Okay. You see, that's about $130. All right. So that's what the course goes for. You have no idea where to start. You want to learn market structure from scratch. I've poured out everything that I know into this particular course right here. And you can see how the course is structured, right? As soon as you get in mindset orientation, introduction to Forex, I'm telling you everything about Forex. What Forex is, how it used to be, how it is right now. We are not just diving into the chart. We're going into, trading terminologies. You can see how long this video is. Okay, trading terminologies, right? Trading terminologies. The entire thing here is about 2 hours and 18 minutes. This one is about 1 hour. This one's 28 minutes. This one's 35 minutes. How to use MT4 and MT5. Okay, how to use trading view. Forex trading terminologies. What's the meaning of bullish, bearish? What's the meaning of, volatility? What's the meaning of volume? All of these things that they might seem unimportant, but this is basically laying the foundation of what you're going to be learning. So it makes sense that you lay the foundation very, very well. And I took my time to really structure this in a way that even a dummy could get this. All right. You don't have to be book smart, intelligent by the book and things of that nature. All you have to do is come here, cop the course, man. Just cop the course. The next thing we have introduction to technical analysis, right? Layers of market structure. So this is where I really dig in. You can see how long the video is, 49 minutes. This is where I really dig in and explain a lot of things, right? That has to do with market structure and things of that nature. And of course, trading zones. And this is the first part of the course. The second part of the course right now is being developed. Okay, the second part of the course is being developed right now as we speak. All right. So all of the things that I'm able to do on the chart in terms of, how you see all of these things that I'm able to do, right? Everything is tied into the course. Everything is packed into the course. Okay. So this is Bitcoin. This is the breakdown on BTC right now. Anybody has any contrary view? Any contrary view on BTC? Any contrary view on BTC? That's basically what BTC is right now. All right. 1 hour time frame. We're still expecting this to go lower. Okay, we're still expecting this to go lower, definitely. Let's go to EURUSD, man. So, like I said, I'm also in a trade on EURUSD. That one is quite, easy to understand. That one is quite easy to understand. Um, but yeah. I mean, the same thing, guys. Same thing. On the daily time frame, I know everybody wanted this market to buy, but like nobody was really entertaining the possibility that the market could be in a sell program. But now you can see after everything has happened, how they happened. Now you can see how the market was definitely in a sell program. Okay. Now you can see it. It's now clear for some reason. It's now very, very evident that, oh shit, the market was selling. Okay. It's now very evident that the market was in a sell program. So the breakdown here is quite simple. Um, the breakdown here is quite simple. So obviously, we are in a downtrend already. We're in a downtrend. And the targets for this particular downtrend is around this area here. So obviously, when the market is trying to make a lower low, it goes a lot lower than the profit target, obviously. But like, that's an area where we can say the market can get to this level. Okay. The market can get to this level. So for the fact that the market can get to that level, we are looking at the possibility of the market actually getting to that level. We're executing a trade and we're holding it all the way for the market to actually get to those levels. All right. So here on the daily time frame is quite easy. Higher time frame, we're already having high, low. I'm drafting out the structure now. Low. The market is reacting from, again, breaker levels, pushing to the downside. Now, along this push to the downside, we have internal market structure on the daily time frame. It's good to note that. Break to the downside, you see, pull back, break to the downside. Okay, so now the market is respecting internal market structure around this area here, also coming from the higher time frame, mind you, because of successful mitigation of everything on this leg. Again, from the higher time frame, if you plot your fib, we're coming into the fib level. Okay, Fibonacci is aligning with market structure. All right, that's where the trade came from. Okay, that's where the trade came from. The last push that took out structure, remember I told you, you want to see first of all multiple breaks of structure to the downside, at least two. This is one break of structure to the downside. This is the second break of structure to the downside that gave it away. Okay, it gave it away that we are now in a downtrend. Okay, because why did the market decide to react off a higher time frame level? Not just react, grab liquidity, okay, reacted, rejected, and is now giving me break of structure to the downside consecutively. Why did all of this happen if this is not going to happen? That's the question. Why did all of that happen? Why has all of that? So that's what we call the storyline. Okay? That's what we call the storyline. All right? So technical analysis basically is a process of developing that storyline. That's basically what technical analysis is. Like, you're trying to develop a storyline. You're almost like a lawyer trying to defend a case. So you want to develop a very strong case. You want a visually, visually compelling storyline, which I've done here right now. There's nobody you will show this and the person will still argue that, oh, we're not in a downtrend. It's clear, it's evident, right? We grab liquidity. Okay, let me start revealing. We grab liquidity. We reacted from a higher time frame level, rejected the level, and started a downtrend. We started breaking structure to the downside. Breaking structure to the downside. And on the last leg where we had the most recent break of structure, which is this high to this low, on that last leg, we plot in our Fibonacci, and our Fibonacci is aligned, right, with some level on the internal structure. Okay, on the internal structure. Internally, we are seeing the market create low, high, low. There's internal break of structure there. I'm gonna mark it out. Then that's so internally we had internal break of structure to the downside there. Okay. And then we had another internal break of structure to the downside here. Okay. Which made this a valid demand level because internal break of structure came from there. And not just that we had internal break of structure. I've said it multiple times that when a particular level of structure breaks multiple levels of structure, that level is a strong level. You should be looking at that level, with eagle eyes, right? We're having internal break of structure here and external break of structure at the very same time. So I want to make this visible on, okay, yeah. So let's go to the 8-hour time frame. You're going to see what's going to happen right now. Can you see that? 8-hour time frame. We are already in a trend on the 8-hour time frame. Now the 8-hour demand level, which is this, is aligning with the daily demand level. Okay? The 8-hour demand level is aligning with the daily demand level. You know what I'm going to do? I'm going to go back. I'm going to make the Fibonacci, right? This is the Fib. I want to make the Fib visible on the 8-hour time frame. So I'm going to visibility, 8-hour time frame. All right. Now the Fib is visible on the 8-hour time frame. Can you see the golden ratio of the Fib is perfectly aligned with the 8-hour demand level, which is perfectly aligned with the daily demand level. You might need to pause this and really look in very, very closely to understand what I'm marking up here. Because I know coming to this time frame, the market is now looking very, very busy. It's because I've basically been documenting the market on its way down. Now, where exactly did the trade come from? I'll show you on the 1-hour time frame. That's the trade right there. So you can see even as I come to the 1-hour time frame, we are seeing multiple levels of internal structure, or multiple layers rather, of internal structure. All right, so I'm going to clean this up a little bit. I'm going to clean this up. Let me say command. Just want to clean this up a little bit. So this is basically the storyline. This is what it has been. All right. Similar price action on GBPUSD as well. Look at this. Similar price action on GBPUSD. Although this market was very choppy, I'm going to say that. It made certain things that were clear, or certain things that would be clear. It made them not so clear. Okay, this market was actually quite choppy while all of these things were going on. All right, so I'm gonna state that. I'm gonna state that. But again, we can see what's going on here. This is a clean downtrend coming from the daily time frame. So I would advise you guys to go back test. Okay, I'll show you the levels where you need to back test. Back test this level right here. Back test these levels right here. Back test this level right here. Okay, because all of these led to this break of structure. And all of this is going to lead to this break of structure. It will be taken out eventually. Also backtest this area right here. Also even backtest this area right here. Backtest this, and that's how you're going to learn this. That's how you're going to come to a very good understanding of market structure. That's how you're going to come to a very good understanding of market structure. All right. That's how you're going to come to a very good understanding of market structure. Man, up Nepal, man. Yo. Okay. So I want you guys to kind of like just go back and do the homework, man. Like, I want you guys to go back and do the homework. I want you guys to go back and do the homework. That's the only way it's going to make sense. That's the only way it's going to, you know, that's the only way. What I'm doing here is going to make sense. I can be here for hours and hours and hours and hours teaching you guys all of the things that I know. But at the end of the day, if you don't go back and mark up your charts, by yourself with your own hands, okay, we're talking about muscle memory right now. We're talking about muscle memory. If you don't go back and do the work to build that muscle memory, it's going to be very, very hard, to be honest with you. It's going to be very, very difficult. Okay, it's going to be very, 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 very difficult if you can't go back and use your own hands to mark up your charts, study the patterns, because at the end of the day, it boils down to patterns, right? Forex trading boils down to patterns. Pattern recognition is the highest form of intelligence, right? It boils down to patterns. But you have to study to a particular level whereby this pattern is now almost like a part of you, where you understand the pattern so well that you can basically, for lack of better words, predict, right? As forex traders, we're basically not predicting, but we're speculating. But for lack of better words, you can now predict what the fulfillment of the pattern is going to be, because you know every phase of the pattern, the impulse, the pullback, and the next impulse. All right. So you can basically predict the pattern, and you can be right a lot of times. You can be right a lot of times. Like you can be wrong as well, but you can be right a lot of times. And the amount of times you're right, even when it's lower than the amount of times that you're wrong, you can still make money because the market extends. The market extends, bro. I can be right once and be wrong 3 times. But that one extension of the market, your Fibonacci extension, you're entering from golden ratio and is extending all the way, right? That one extension can give you a lot of money, okay? To the point where you can now even afford to take some losses on the side. All right, so that's going to be the end of this particular stream. If you missed this particular stream, I don't want you to miss the next one, okay? Because I'm going to be coming live every now and again. I want you guys to, before I leave, I want you guys to subscribe to the channel. So I'm going to be showing you the channel once again. Subscribe to the channel, guys. Like, that's one of the only ways to support the channel. All right, subscribe to the channel. Um, like the videos that I put out there. Engage the videos. This is the channel right here. Okay, subscribe to the channel, like the videos, engage the channel. Also, share the channel, man. Share with your peoples, right? Share the channel with anybody who is interested in trading and things of that nature. And of course, the course, okay? The course, the Forex Trading Blueprint, guys, by GPS Trading Academy. The course is on sale, is on seller. You can simply copy the link, okay? Copy the link right here, and it's going to take you to the course, or you can find the link in the description of my YouTube videos. Okay, so I really want to say thank you guys to everybody who joined this particular live stream. Thank you guys for joining. I really hope you learned something from this live stream, and I really hope that you guys are going to join the next one, and I really hope that you guys are going to be a part of the family. So without any further ado, thank you guys for joining, and I'll see you guys in another one, man. It's going to be gang from me. Gang gang.